The CFPB announcing stricter rules for companies that track and sell people's personal data at an event today at the White House. The agency saying the explosion of AI into the mainstream and the data it requires has sparked the need for more oversight. The big three credit bureaus in the U.S., Experian, Equifax, and TransUnion, all finishing lower. Joining us now is Rohit Chopra, Director of the Consumer Financial Protection Bureau. Rohit, welcome. So I actually want to step back with the consumer credit situation right now. I think the average consumer carries a credit card debt of close to $6,000, the highest in a decade, and the rate of new delinquencies has surpassed its pre-COVID level. So what are you seeing from consumers and perhaps some in the market trying to take advantage of consumers in this situation?
Well, so far, we've seen an aggregate $1 trillion that American consumers owe on credit cards. It's still one of the biggest lending products people have. One of the things we're looking for is when student loan payments restart, is that going to create some additional stress for credit card borrowers? We're also looking hard at what are the rates people are paying. We see real impacts of higher interest rates and also other pieces of the consumer credit market, including auto loans. So far, we're not panicking in any way. It has returned to normal, but there are slices of the public who are experiencing stress, and we're trying to make sure that everyone is following the law and, frankly, that consumers know what they're getting into.
I noticed that you've taken actions lately against some lease-to-own companies, some auto lenders who you say are engaging in practices that are not great for the subprime market. I wonder what you're seeing from buy now, pay later, right? Because they presented themselves as a more consumer-friendly alternative to some of the other products out there. Are they relatively straight and narrow so far?
Well, what we have said is that we would like the buy now, pay later firms to really observe some of the same protections as credit card companies when it comes to disputes and returns, when it comes to fees. We want consumers to have a lot of choice, but we don't want there being a lot of arbitrage around the rules. So what we are doing is we are supervising those firms to make sure they're playing by the rules and looking at ways in which their business model is evolving. We are seeing some signs that they're creeping toward more of a Chinese-style model that we see with Alipay and other firms, WeChat Pay, and how they might be combining payments and data surveillance into their business model. So it's certainly a place we're keeping our eye on.
Yeah, it's great to have you back on the show. I do want to get to the news of the day, and specifically when we talk about the need for more oversight of the data broker industry. What's constituting a data broker in this day and age when data is the bedrock of everything, particularly from a digital standpoint? And how do you apply a 1970 law to that, since the world is so different now?
You know what's interesting? We've had laws on the books for not just decades, but actually over 100 years in certain circumstances about how we put and draw the line around invasive surveillance practices. We've had state peeping Tom laws, other privacy laws. So what we wanted to look at was how were some data brokers copying the firms that were more like credit reporting agencies or background screening companies. We found incidents where data brokers were assembling very, very detailed profiles on people, monetizing them, and often feeding artificial intelligence predictive analytics. So I think we're looking at what are the types of business practices they're using to harvest our data, and if so, shouldn't they abide by some of the same transparency, accuracy, and other standards that have long been observed in our country?